Welcome back. This is Jacob Milliken, owner of 9M Investments, and today this video is going to go going through January's private performance numbers. Kind of give you an idea of what happened in January. I know we're a little bit late getting this video out, but I still wanted to go through and kind of give you an update of what happened in January. So within the public markets, the S&P 500 was up over 1.5%. NASDAQ was up almost 2%. The ag was still down in January, right over 27 basis points. So that kind of gives you the backdrop of, how did our performance or private performance stack up versus that. So within private equity, private real estate, and private credit are the three main sectors that we use on the private side. Within those funds, within the private REITs, Blackstone, Nuveen Global Cities are the two main REITs that I use currently. Blackstone Private Credit, Carlyle Tactical Credit within the private credit space. And then the private equity groups I use are iDirect Private Markets Fund and BlackRock Private Investment Fund. Each one of these has kind of different sectors and tacks of how they approach this. But kind of go through the numbers for January. Within the REIT space, Blackstone was up over 0.5%. Nuveen Global Cities was down slightly. But compared to the public REIT space, there was actually quite a bit of performance, overperformance versus what was happening in the public space. And on top of that, the dividends within these two funds remain strong, and really the tax advantages that you can have if these two investments are inside of a taxable account are hard to beat. So within a taxable account, if we're taking this dividend for either one of these, there's tax advantages. Currently, Blackstone's 4.6% dividend is 85% tax-free if that's used within a taxable account. Nuveen Global Cities REIT, 5.59%. Again, that is 100% tax-free currently if we're using that dividend for income reasons from a taxable account. So even though kind of last year, both of these funds traded somewhat sideways, that dividend didn't change. And actually Nuveen's dividend went up slightly last year. So still a great tool for, non-correlated investments versus stocks and bonds. And then some of the tax advantages with that dividend is an important key, especially if we're going to be using that for income. To the private credit space, if you've seen my videos before, last year was gangbusters for the private credit. Both these funds did over 14%, and really they've kind of come out of the gates so far in January and continue to perform. Blackstone Private Credit up 1%, Carlyle's Tactical Credit up 1.42%. And as you can see, the very, very strong dividends, 10.4% for both of these funds currently. Now, there isn't a tax advantage with that, but if we can get a 10% dividend, we're going to take that all the way. Especially when you compare that to the ag that was down slightly, it just very, very strong performance. Not only is the dividend strong from a volatility standpoint and a portfolio construction standpoint, these move less than treasuries from a volatility standpoint, and then you'll get higher yields than you would get from kind of the high yield space. So very strong combination, and look for big things from these funds moving forward this year. Onto the private equity space, iDirect's fund was down slightly in January. Again, if kind of give you an update with that, that is a kind of a fund of funds from a combination of KKR, Vista Partners, and Warburg Pincus. This fund has the ability to look at those three powerhouses and choose the funds that make sense for this particular fund. And so really you get three managers that are well known within the space. And then you get the iDirect the ability to pick which funds make the most sense for this particular fund. This fund, even though it was down slightly, again, we expect outperformance over the S&P 500 over the long term. This also has some international exposure, so you get a nice diversified fund. And again, it's broken up through three major powerhouses within the private equity space that have done great things in the past, and we expect to have great things going forward. In the BlackRock Private Investment Fund, it was up 0.44% so far in January. Again, this is a newer fund from BlackRock. Management teams has been around in the private equity space for a long, long time. This particular fund has some venture capital space within it, and then growth and buyout is kind of the other piece of this fund. Venture capital in general was beat up pretty bad with the higher interest rates. But some of these investments that are being placed over the last 6 months or so, I really expect big things from, and buying in at kind of low points within that space. We expect to get some pretty significant outperformance going forward. Now, how long does that take? How long does that show? We'll have to see and wait and see. But for both of these funds, again, the goal is the outperformance of the S&P 500. Much lower volatility. Typically you're looking for volatility that's less than half what you would get from the S&P 500. So you don't get those kind of crazy ups and downs that you will with the S&P 500, with still the ability to get that outperformance. Because again, that's why we use these types of funds to begin with. So anyway, that was our quick update for January. If you have any questions, please reach out. I'd be happy to answer anything that you have. I hope you have a great week. Thanks. Bye.